Hey, John, yeah, the three dissenters, they all wanted a quarter-point increase, struck some familiar themes among the three that lay out the hawkish case for a rate hike right now. Among those three themes, small hikes now could avoid big hikes later. Inflation will not take care of itself, even if they are caused by supply shocks. And inflation has been too high now for too long. Among the dissenters, Dallas Fed President Lori Logan, she writes, without any policy restraint, inflation will likely continue to trend above target. And then there was Beth Hammock from Cleveland. She offered businesses describe pricing pressures as broadening rather than fading, and consumers are expressing despair over persistently higher prices. Now, to be sure, 9 officials voted for a pause, and that's where the majority is right now. They haven't spoken yet. Fed Chairman Kevin Warsh, he even rejected calling this week's action a pause.
Did the Fed take an explicit change in its policy rate today? No, but I think that's the beginning of the story, not the end of the story.
So that could mean Warsh is maybe closer to the hawks than most believe from his press conference, and is waiting perhaps for more data to see which way inflation trends go and whether the Fed needs to respond. John, there's 2 CPIs between now and the next September meeting.
Okay, that's a lot of good data. Stick with us, Steve. I want to bring in CNBC's senior economics writer, Matt Peterson, and Allianz chief economic advisor, Mohamed El-Erian. Great to have both of you. Mohamed, before I get to you, Matt, I believe you just put out a piece. What is your take, your point on how the market might have been misreading Chair Warsh's comments?
Yeah, I think Steve was really getting at it there. Kevin Warsh, I think, was a lot more hawkish than everybody heard. You know, people who listened to his exchanges with reporters and came away thinking, when will this guy ever raise interest rates? I think maybe missed what he said in his prepared opening remarks that he read out at the beginning of the press conference, where he said very clearly that the Fed, is committed to hitting exactly that 2% target. He talked about potentially reducing the balance sheet, which he thinks would tighten financial conditions. And he made a handful of other comments that I think just really got muddled when he got into the back and forth with reporters.
Mohamed, do you think it was muddled?
Not at all. First, I agree with what Matt and Steve said. If you look at the 9 who voted for, I deeply suspect that Kevin Warsh was among the more hawkish of the 9. Look, I don't understand this whole thing about Fed credibility. Brent put it really well at the beginning of the show. This much ado about nothing. If you look at the data, there was no reason to hike at this rate, at this time. If you look at what Warsh has been doing, he's been doing exactly what he told us. He doesn't like traditional forward guidance, and for good reason. And he doesn't want to front run the task force. So there was nothing surprising. I think what you're seeing here, John, more than anything else, is that the market is nervous that its training wheels are being taken off. And you know that for a long time I've believed that this codependency has gone too far, and I'm glad we have a Fed chair that's willing to confront this issue.
Mohamed, could it be that the market is listening for President Trump, even though it's Warsh's lips that are moving?
Again, no, it's real rates that have gone up, not break-evens. And I think the basic issue, and I've been talking about this for the last few months, is if you do, John, a very simple sources and uses of loanable funds. What we used to do in the old days before the era of abundant liquidity, you would figure out very quickly that between the government deficit, between the tech bond issuance that is happening this year, rates need to go higher. We have an amazing capital markets. It can fund innovation. It can fund what's going to move productivity up. But in the short term, the funding cost is going to have to go up to attract the sort of money we need for all the potential uses of bond financing.
Okay, and Steve Leisman, what I was getting at there is, while the market's getting used to the way Warsh talks, we're very accustomed at this point to the way President Trump talks, and we know why he wanted Warsh in the seat where he is. And I wonder how much you think the market reaction might have to do with that.